Korea's equipment investment is drawing broad attention thanks to the recent high growth rates on the back of improvements in certain industries, including semiconductors. However, the average capacity utilization rate of manufacturing sectors remains on a downward trajectory since the 2008 global financial crisis, raising concerns that this could hinder equipment investment. As such, this study analyzes the relationship between equipment investment and the manufacturing utilization rate to draw on the implications of future trends. Let us start by examining the utilization rate by sector. An examination into the distribution of the utilization rate among the top 10 manufacturing sectors uncovers a sizable gap. From 2010 to 2016, those at the bottom of the spectrum posted steep declines in their utilization rate, from approximately 76% to just 40%. This in turn has acted to drag down the overall average utilization rate in the manufacturing industry. Exacerbating the problem is that certain sectors at the bottom, including other transport equipment, for example shipbuilding, and electronic parts, expanded the capacity despite the decline in production. And it is found that the share of zombie firms, i.e., those receiving financial support and are potentially insolvent in these sectors, is growing. This suggests an ongoing need for restructuring, because a large share of zombie firms indicates excess capacity. So, how does low utilization rates affect equipment investment? An empirical analysis reveals that on a 1 percentage point improvement in operating profits, the investment rate will increase by 0.24%. However, this does not hold true for those with a utilization rate of below 60%. Ultimately, what this implies is that because sectors with a low utilization rate have a high tendency to withhold investment, the recent improvement trend in equipment investment will not expand across all sectors. Next, an analysis was conducted on the source of the falling average utilization rate from a macroeconomic perspective. The results show that the projections for demand have a meaningful impact on the average utilization rate of manufacturing sectors. For example, positive projections for private consumption and exports increases production and therefore the utilization rate, while the opposite lowers the utilization rate and impedes equipment investment. Indeed, the results suggest that as expectations for exports and private consumption declined following the global financial crisis, demand conditions worsened, which drove down the average utilization rate in the manufacturing industry. In addition, a regression analysis found that on a 1 percentage point drop in the average utilization rate, the growth rate in equipment investment will fall by 1.26 percentage points during the following quarter. In sum, the outcome of the study confirms that if internal and external demand conditions do not improve in the near future, the average utilization rate in the manufacturing industry will continue to remain low for the time being, limiting equipment investment.
결국 전반적인 수요 여건이 부진한 가운데 우리나라 기업들이 생산 감소에 대응하여 적절히 구조조정을 하지 않았던 것이 향후 설비 투자의 제약 요인으로 작용한다고 볼 수 있습니다. 이와 같은 문제를 해소하기 위해서는 기업의 진입 퇴출 활성화 등 우리 경제의 역동성을 제고하는 노력이 필요하다고 생각합니다. 기업 구조조정을 통한 과잉 설비 감축은 일부 업종에 집중된 낮은 가동률을 반등시키는 데 도움이 될 뿐만 아니라 중장기적으로는 새로운 수요를 창출할 수 있는 기업의 진입과 성장에도 긍정적으로 작용할 것이기 때문입니다.